A very good evening to all my professional friends to the webinar on internal audit and risk control matrix for non-financial areas, a holistic approach. I am honored to be here as your moderator, and I am privileged to welcome all the dignitaries of IASB present here. I thank C.H. Chandrasekhar Chitaya sir, Chairman of IASB in absentia, a visionary leader whose strategic insights have always guided the institute and the fraternity at large. I also thank C.A. Ravi Kumar Patwa sir, Vice Chairman of IASB in absentia, whose guidance and expertise has been instrumental in driving innovation in governance and assurance functions. As we move ahead, I am privileged to welcome C. Harsha Ramnani ma'am, who is with us today as a speaker and who shall cover what is ESG, why it is important, what are the challenges for effective ESG risk management, what constitutes non-financial reporting, how to conduct internal audit of such non-financial information, and how to report the same. Then, what is the responsibility of the board? What is the framework, internal controls, as well as a risk control matrix and its implementation? So, if you observe, it's a all-round coverage of the topic for today's of today. Now, it's my privilege to introduce our distinguished faculty, C. Harsha Ramnani ma'am. She is a fellow chartered accountant, a registered valuer for securities and financial assets, and holds a diploma in information system audit from ICAI. A ranker throughout, she has also earned multiple certifications in forensic audit, social audit, Ind AS, and climate finance. With over 15 years of professional experience, she has worked extensively across industries, including textiles, real estate, healthcare, telecom, banking, automobile, and power sector as well. Her core expertise spans statutory and internal audits, valuations, ESG reporting and assurance, impact assessments, due diligences, and forensic audits. She has contributed as a facilitator in a World Bank funded project for online audit management for the government of Rajasthan and has authored technical guides and background materials which are published by ICAI. Her articles have appeared in leading professional journals and newspapers, and she is a regular faculty for ICAI, ICSI, and ICMAI, where she trains professionals in valuation, management accounting, social audit, and sustainability reporting. Her global exposure includes handling assignments and investigations in the USA, EU, Middle East, Russia, China, and beyond. With such a rich background and remarkable achievements, we're indeed honored to have Ms. Harsha Ramnani ma'am with us today to share her insights and expertise. Ma'am, we are truly privileged to have you here today. So please, all of us, join me in giving her a warm welcome. And with this, I hand over to you, ma'am.
Thank you so much, CA Anup sir, first of all, for such a nice introduction. And you already, brief about the subject, what exactly we are going to have today. And I also, extend my thanks to the IA Internal Audit Standard Board and the Chairman sir and the Vice Chairman sir for giving me this opportunity. And without wasting much time, let me share first of all my screen, and then we can start the discussion on the subject so that we can have a fruitful day and the next 2 hours, I can say precisely. So I would be requesting as and when anyone of is having a query, just feel free to share the same in a question answer box, and maybe the Anup sir, as and when you find it suitable to share with me, I'll try to respond with the slide itself. Topic is little bit different from the regular one which we are doing in a regular course of our business, like internal audit. As I understand, we all do as a chartered accountant, but generally we are covering other operational areas or maybe other functional areas. But the non-financial reporting is something which is I will not say very much new for all of us, because now for last 3 years we are little bit familiar about what exactly is the non-financial reporting. But yes, for a few of us, it is something new where probably we need to understand what exactly, first of all, it's a non-financial reporting, and then we'll start understanding about how exactly, as this internal audit and a risk control metrics is first of all important for these areas, and how we can look for all these aspects when it's come to the non-financial reporting and an internal audit and a risk control metrics. So how I am looking for next 2 hours. So this is something which probably we have planned for next 2 hours. First of all, we are going to understand about the ESG ecosystem, what kind of the ESG ecosystem right now we are having, why it is important, why probably we are discussing this topic today right now. Then we also understand about the non-financial reporting. The word non is something very much important for all of us, because financial reporting as a chartered accountant, we all understand very much in detail. But when it's come to the non-financial reporting, the scope is huge. There are so many things which we need to understand, which we need to take in consideration when we are having a discussion with respect to the scope of work and the area which we need to cover up. Then we'll come on the point like internal audit of the non-financial reporting, why it is important, why we are discussing internal audit aspect in the non-financial reporting. Because till now, probably whatever the discussions you already had with any of your peer group, with your friends, with your companies, or maybe any of other people, it was all about the reporting aspect, or maybe the assurance report, which is being required by any of the regulatory part. So internal audit is something which also we need to understand why it is important. Then the integrated reporting is also which I kept for the discussion, so that also we will understand why I kept it for the discussion part and how it is linked with the internal audit. Board responsibilities, because ultimately internal auditor is working for the board members, for the company. So how the board is responsible for the internal audit, what is the board expectation from the internal audit, and how we can be a good partner for the board members, what how we can fulfill their expectations. So that we'll try to understand from these slides. Then we'll come on the internal controls and the RCM part for the non-financial areas. So what kind of the internal controls there can be, how the RCM can be prepared, so that probably we can understand. And later on, last, just implementation aspect and a question answer we can take. For question answer, I already requested Anup sir. He can share with me during the slides itself. And otherwise, on a last also we can have a question answer session. So when I'm saying about the ESG ecosystem, I think this particular slide will give you an overall understanding, overview, complete ecosystem background, like why ESG is there, why sustainability is there. Whenever I'm talking about ESG or sustainability, then BRSR reporting is also something coming up in a picture, because that is a mandatory requirement for Indian companies. So for all these requirements, whether you call it as a ESG, whether you call it as a BRSR, whether you call it as a sustainability reporting, the purpose is to fulfill all these 17 sustainable development goals. So in this particular slide, you are seeing the 17 sustainable development goals. When I'm talking about 17 sustainable development goals, these 17 sustainable development goals are interlinked. So the innermost circle is the core goal, which any a country. So India is one of the signatory for these sustainable development goals. In 2015, India has signed these sustainable development goals. So this is our responsibility, and that's the reason all companies are responsible for the ESG reporting, sustainability reporting. Mandatory requirements are also there, and otherwise also there are certain requirements which we need to fulfill. So the innermost circle is about the core goals, ultimately for which we are working, something which we wanted to achieve, like climate action, goal number 13. So purpose is to take care of the climate action. We can always now observe the kind of climate probably now we are facing. Like just in afternoon, I was having a meeting with one of the client who is in a Delhi part. So the client was like, I'm not able to visit the office in last 2 days or 3 days because of the heavy rains. And this year we are not able to understand why since April there is a so much rain. So that's the climate change we all are observing on a different part of countries, not exactly in a particular area. Every country, maybe every continent, or maybe every side of all over the globe, everyone is observing the same. Then outer boundary, it's about something which we call it as an immediate connection with the core goals. To achieve that core goals, these are the immediate connection for which we need to work upon. Like if I talk about no poverty, or maybe if I talk about something like, good lifestyle. So this is something of other goals which generally we work for the immediate connection. Then it's come to the critical linkage, which is the outer boundary of the immediate connection. So the critical linkages where we talk about the gender equality and the quality education, good and healthy and well-being. So these are the certain other goals for which we are working, which ultimately, if I'm working for the gender equality or a good quality education, it will help me to serve the goal which is no poverty, because if I am having a good education, then I will be able to help my family to have a good lifestyle, which is somewhere help to achieve the goal which is no poverty. And the core goal I will be able to try to work, which is linked to the clean workplace or economic growth. So somehow other goals are connected. And the wider foundation, the outermost, the circle is the something which generally we kept as our first priority, our first goal, the primary goal, initial goals, where we keep like the life below the water, there are life on the land, the peace, the partnership, clean water. These are something which generally we wanted to work when we are working as a business, or as a responsible business when we are talking about. So these are the ultimate goal which we wanted to achieve. As the ESG reporting purpose is to serve these 17 sustainable goals. So this is the ecosystem ultimately for which all these reporting, all these requirements we are talking about today. Why ESG is important? So now every organization is being impacted by the environment and market and the societal force, which is somewhere amplifying the sustainability. And when I'm talking all these about, so at the same time, every organization, every company, they are contributing to all these forces. It is not a single case where you can give an example, or you can give a case that this is a company which is not contributing to all these forces. Every company is contributing to these forces. There is an impact. There is a case which is giving, on planet and a society. So because of all these things, because of all these purposes, now stakeholders in a ESG ecosystem, we are not generally talking about shareholders. We are generally addressing it as a stakeholders, because here the purpose is to address more people who are connected to your business, who are connected to your company. So as stakeholders are demanding more actions and disclosures from the companies on these issues, every stakeholder wanted to understand how you are how you are taking care of the environmental part, or how in a community where you are running your business, how you are taking care of that community. So that's the reason ESG is important. When I understand that why ESG is important, so as a company, what are the challenges where I find it, difficulty for the effective risk management, ESG risk management, because business risk management, for a long period, we all are working on that particular domain. But ESG risk management, this is something very new for all of us. So many of the companies right now are managing these ESG issues on an ad hoc basis. They are not having the kind of risk register generally we do have for normal business risk management. Generally, we have. So they are just having a ad hoc basis without any coordination, without any strategic approach, or without any strong enterprises oversight, like how ESG risks are there, how opportunities they can tap in a future. Whenever you are having a discussion with any of the company and you wanted to understand exactly how they see the ESG for their company, probably you will not get a response from any of the company that this is how ESG is impacting to their business. This is the impact. Whether the ESG is risk for them or whether the ESG is opportunity for them, you will not get a proper response from any of the organization. So this is one of the challenge where probably as an internal audit, you can find an opportunity for yourself, a lack of common ESG metrics and a framework. Worldwide, there are multiple frameworks, multiple matrices are there. Applicability is different, requirements are different. So there are multiple frameworks are there. Now everyone is having a need of a common framework, common metrics. But at present, if you ask me, or if you talk about like, is there any specific metrics which will be applicable on a certain class of industries or certain class of companies, or maybe is in a particular case? So that is something, a kind of study which required from a particular professional, that for a particular case, for a particular industry, this is something, a metrics or a framework which will be applicable and which will give a fruitful result. So lack of common metrics or a frameworks which require a evolving market and a regulatory development. For example, manufacturing, obviously environmental issues will be on a higher side. So in that case, uh, GRI can be a framework which can be considered. There will be other frameworks where the environmental disclosures are on a higher side, that can be considered for the purpose of higher reporting. If I talk about any banking institution, then in that case scenario, SASB can be one of the framework, TCFD can be one of framework. Now IFRS also has issued two standard S1, S2, so that can also be considered in a particular case. Insurance also, because they are in a service industry. So again, similar kind of the example can be considered. If I consider the IT business, so in that case, the different scenario will be there. So case to case basis, you need to think upon, you need to analyze, you need to understand what will be beneficial for them, and then there will be a certain things which you can work upon. Then a limited maturity of ESG technologies. So yes, right now if I talk about, there are very limited tech partners or ESG enabling technologies available, where a clarity on data sources across on the ESG requirement, which required your most of the time to understand first of all the data requirement, and once the data is with you, then a cleaning of data and the validation of the data. So that's the reason our role is more here, because without, what I understand, without internal audit, without internal controls, external assurance is not possible. And a case where my maturity, of IT is very limited, then our responsibility is on a very higher side. So that's the reason I always consider that internal audit and controls is have a more responsibility in the non-financial area rather than in a financial areas. What can be a leading approach to manage ESG risk here? So, as a company, ESG focus may be initially centered for the non-financial reporting and compliance. Initially, companies are more looking only for the regulatory aspect, only for the regulatory compliance purpose. They are not generally think upon like regularly they are looking for internal controls, RCM, internal audits, etc. But later on, because ultimately you need to go for the external assurance as well. So before external assurance, there will be a need of controls, there will be a need of RCM, and there will be a need of internal audit as well. So that is something approach every company needs to follow. And when I'm talking about sustainability, it is not something as a part of business, it is a whole of business perspective. So that, thought process we need to always have in a mind, that it is just not a part of my business, it is as a whole of business. Everything is included here. Operation is included there, enterprises risk is there, management is there, talent is there, supply chain management is there, everything is there. So every part of business is considered whenever I'm talking about sustainability aspect. How ESG is transforming the corporate landscape. So what I have experienced in last 4 to 5 years, my board discussion has been changed drastically. If I give you just an example of my 5 years before discussions in a boardroom and the now discussion in a boardroom, 5 years back, it was all about economic aspect, it was all about business aspect, it was all about what exactly is the top line and the bottom line. That's it. There was no other discussion actually which was happening. But now, apart from top line, whenever it is coming to the bottom line, it is not only about the profit aspect, it is not only about the economic aspect, they are talking for the triple bottom line. When I'm saying the triple bottom line, it means they are also concerned for the environmental part, my first bottom line, the social aspect, my second bottom line, and the third economic aspect, which was always there, my profit aspect. So that's how my board discussion has been changed over the in past exactly 4 to 5 years, which I have personally experienced in few times. Climate change, that I think we already discussed. So in last, so I think since COVID, we all are experiencing a different climate part. COVID was one of the event which we already have seen in past. Then there are different cases which we all are experiencing over the period of time. Something is happening on a certain part, something is happening on a certain part. So climate is also something which is now giving, showing us that this is something it's now required. And we also need to think upon, because many of the companies are now not having the business continuity plan. What happened if climate is somewhere, impacting the business adversely? So if your company is having an office on on a particular place, they don't have that kind of the plan. What is happening? Like, just I give you the example of a capital itself, where people are working from home. Although now the working from home is the common things, and there are few offices which can work easily in a work from home culture. But there are certain also things which we cannot run in terms of the work from home concept. So that is something again we also need to address through sustainability aspect. Access to capital. So now this is something also a interesting factor which we need to understand. Investors are now increasingly giving importance to the ESG factors whenever they are making a decision for the investment part. And the reason why they are giving more interest to the ESG factors. See, as a investor, what I want personally, I always want a higher returns on my investment. So what I will see in a near future, whether I need a 20% return for next 5 years only, or I want a 15% decent return for next 20 years. So probably I will be expecting a 15% return in next 20 years, where my longevity of the return is there. If my business is not a sustainable business, or somewhere not ESG compliant, where a certain disruption can be there, then in that scenario, in that cases, investor is not somewhere finding themselves aligned with your business interest and business perspective. So that is something a different alignment we have seen in past now from the investor side. Regulatory development. So probably now we all are aware about BRSR reporting. It's a part of top 1,000 listed companies. And it's not a case like it is only for the top 1,000 listed companies. Every year, top 1,000 listed companies list is changing. So approximately, if I am not wrong, you can see for 1,300 to 1,400 companies, a BRSR reporting. Assurance is also now mandatory as per the threshold that we will discuss in coming slide. So regulatory development is also coming up regularly. ESG credit rating is also a part of regulatory development. Now the green credit rules are there. Carbon credit market is also part of regulatory development. There are various development. And in past 2 to 3 years, development in a rapid speed, like every time in a month or two, I always see a change which is coming in a non-financial area. So it's a kind of a speed which probably I was even not expecting that kind of a speed. You can see a changes in a non-financial domain. A reporting standard. So now we have a standard itself like IFRS, as I mentioned, already issued 2 standards which they are now promoting to follow by most of the MNCs, and measurement and the reporting for the ESG related information so that investor can have a disclosure standard to making their headways. Stakeholder pressures. So, like when I'm talking about investors, they have a pressure. Apart from investors, regulators have a mandatory requirement. Bankers now always asking for the ESG credit rating. Apart from that, there are other stakeholders also who are a part of your companies. They also giving a increasing a pressure to have a good ESG performance, so that everyone wanted to see a company with a good ESG image or maybe a good ESG impact on the society rather than a company which is having a negative ESG in their bucket list. Financial impact. So if you, as a company, you are non-compliant to the ESG part, so there will be certain non-compliant things which probably in future company may face. Capital will be something which will be a little excess, will be little bit difficult or maybe on a higher rate of capital. Then also there will be certain other risk and returns which company will probably face in a near future. And talent also. So now we all understand that people want a company with a work-life balance where they also want money with a peace of mind. So with a proper companies where they see like okay, good life balance is there, that is something they wanted to have their good lifestyle. So overall ESG transformation and landscape, something I tried to explain in one of the slide, and this is something a reason probably companies are having a non-financial information also very much important in their businesses, and a need how to maintain that non-financial informations so that reporting can be aligned. And to have a proper reporting, there are certain other things which we'll discuss in our coming slides. Now we'll come on a point, what is non-financial reporting? So when I'm saying a non-financial reporting in India, if I talk about, we generally call it as a BRSR report. So business responsibility and sustainability reporting is an example of non-financial reporting. It is not a non-financial reporting. It is a one of example of non-financial reporting. CSR reporting is also a part example of non-financial reporting, and there can be one more examples of non-financial reporting. So basically, the non-financial reporting is the reporting where you disclose the information which is beyond financial performance and including your environmental impact, social responsibility, and the governance practices. So the 3 pillars, ESG, these 3 pillars, whenever you are, somewhere consolidating as a part of report, that report is being considered as a non-financial reporting. Generally, why we are preparing these reports? So we preparing these reports to provide stakeholders with a holistic view of your organization activities, your sustainability efforts, and your ethical practices. So like CSR reports, when I'm preparing, I wanted to present, I wanted to show cause like these are the areas where I'm spending money other than my business interests. Like if I'm spending money on schools, if I'm spending money on hospitals, if I'm spending money on any other places. So I wanted to show that other than business also, I'm spending money for the community purpose. So that's how we try to provide a holistic view of the organization activities. And the non-financial reporting can also be considered in a different name. Some of companies present it as a sustainability reporting, some of companies present it as a ESG reporting, some of company present it as a CSR reporting. Again, as I mentioned, it is one of the regulatory requirement. BRSR is one of the regulatory requirement, and there are multiple different other names which can be considered and which can be a part of non-financial reporting. Anup, is there any query which you wanted me to answer till now from any of the slide? Uh, Apart from key component of non-financial reporting, so what generally are the key components of non-financial reporting? So as I mentioned, these are the three pillars generally we consider is the ESG. And normally I say like for ESG, we should call it as GES, because where the governance practices is in place, the good governance practices are there, or in an internal audit practice, generally we call it as a tone at the top. If my tone at the top is right, if it is everything is in a order, then you can understand the environmental aspect they will take care, the social aspect they will take care. So these are the three key components which we consider in a non-financial reporting. Environmental aspects, which includes your greenhouse gas emission, energy consumptions, water usage, waste management, biodiversity, etc. When I'm talking about the social reporting aspect, so in a social reporting, apart from your employees, apart from your own people whom with you are working, whom with you are running your business, you also need to include other people, the community where you are running your business, your value chain partners, your vendors, everyone. So it is not only about your employees, it is also the people for whom you are running the business. It is for the people around you are running the business. So that's how the social reporting works. Data on the employees, turnover rates, training, development programs, diversity, DEI, generally we call it as inclusion in efforts, workplace. These are the things we consider. And the details on the product safety, quality standard, customer satisfaction. So business generally work for the customers. Customer is always a priority. But when I'm talking about the priority, so good practices for the customer satisfaction is something which is on the priority when it's come to the non-financial reporting. And the governance reporting, which I always considered as a first part. So the composition and structure of the board of directors, their executive compensation, the shareholders' right, the governance policies, practices which is related to the ethics, anti-corruption, bribery, compliances with the law and regulation, risk management, etc. is a part of my governance reporting. Now we come to the point, which is the next part of why internal audit is important for the non-financial reporting. I understand from most of the audience, everyone is probably working for the internal audit of the financial areas, and you can correlate that why we do the internal audit for the financial areas. Generally, we do the internal audit for the financial areas to give a comfort to the statutory auditors, to give a comfort to the board of directors, and to the give a comfort to the independent directors. This is something a purpose in most of the cases we understand. So financial data was always relied on the internal audit for accuracy and efficiency. Probably you have not seen a case for the listed company where statutory auditor has signed any of the report, whether it is a limited review report or the statutory auditor report, without an internal audit report. We always ask for the internal audit whether it has been conducted or not. If conducted, what are the their pointers, whether is there any financial implication or not, how was the audit conducted, what was the areas, how it was done. If we want to have a conversation with them, that we also do. Reports are always shared with us, so that's how the mechanism generally we always have. Now the same is being becoming a true for the non-financial data. And why it is becoming a true for non-financial data? Because as I mentioned, BRSR reporting is mandatory for top 1000 listed company. When I'm saying it is a reporting, that means it is a self-disclosure by the company. Company is disclosing a fact by them. There is no assurance till now. Now, if they want to have a credit rating, then whenever the agency who is coming for the credit rating purpose, what kind of the data they will rely more, whether the unaudited data or audited data. For sure, the audited data rather than unaudited data, even though it is a non-financial data. So if there is no regulatory requirement itself, then also there is the importance of internal audit, so that if they want to have a credit rating, so that they can have a audited non-financial reporting, they can show them that we have an internal control mechanism, we have a RCM for the non-financial data, and that's how the mechanism are in place for the company. Second, the companies where there is a regulatory requirement for the external assurance, my BRSR core requirement. For that requirement, I am 100% sure that assurance provider will be asking 100% for the internal audit reports for the non-financial areas, because for my 9 core attributes, without having a comfort from the control aspect for the RCM aspect, how in a limited time period, how in a limited tenure, I can give a comfort and can give a clean report to the regulator that everything is a fine. So that's the reason internal audit is important for the sustainability metrics for non-financial data. Generally, internal audit acts are working as check your own work. So companies are having a place of internal controls as well as RCMs are there, and that is giving a leading to more reliable reporting and giving comfort to the statutory auditors, regulators, and other related stakeholders. So I just give you one example. Meanwhile, Anup, just if you can check if there is any question which we should take right now from the slides, which is being we have already discussed. This is the example of one of the textile company, that how we can have a more transparent system about the environmental impact and the social impact. So like if I'm talking about the environmental aspect, so how it is being required. So in textile, my water is something is as a major consumption, which I understand. So environmental aspect, my water consumption, I need to track my manufacturing process, I need to track my use of recycled material, I need to track, and the commitment to the renewable energy sources. So this is something as a non-financial reporting. These are the few KPIs. Just I have given you the example. If I am considering these KPIs to report as my non-financial reporting aspect, for those KPIs, first of all, I should have first certain controls. For certain controls, there should be a certain RCM and then internal audit mechanism. On a quarterly basis or maybe on a half yearly basis, there should be a audit where a certain control testing should be there, that okay, these are the controls with which probably either adequate or working effectively, or if it is not adequate or working effectively, this is something an internal auditor is more suggesting, to have a adequate and a effective or efficient control system. If I'm talking about a social aspect, so in that cases, a fair labor practices, because textile industry is little bit labor intensive industry. More labor is always required. So there are programs to promote diversity, because female labor is always there in a textile companies. You can more see in a female part, and inclusion in the workplace and the charitable to giving initiatives. And similarly, if I talk about governance, so anti-bribery and corruption policies, their approaches, data privacy, because now we have a separate act. There are the reporting which is being required, the composition of the board of directors, the term of diversity, and the expertise. These are certain things which we need to consider for the non-financial reporting aspect. And when I'm considering the same for the non-financial reporting aspect, accordingly controls, RCM, and the internal audit I need to plan.
Ma'am, if I can intervene, and then there's one question that probably you can take it right now. So, which standard is widely accepted in India that is more aligned to the BRSR report? Is it GRI or IFRS standards, or do we apply any other standard? So, this is a question that we have received.
So, when it's come to any particular standard or a framework, it depends on the industry. First of all, you need to see for particular industry which a standard or a framework will be more aligned or more practical. If it come to any manufacturing industry, like if I give just you an example of any textile industry or any other industry where my environmental impact is on a higher side, then I would suggest you on go with the GRI standard. Or if any company which is MNC, so if company which is having a place offices on a different countries, because GRI is one of the oldest framework, so the acceptability of the GRI framework is on a other countries on a higher side. So in that case, I would suggest you to go with the GRI framework. If you are asking for any of the financial institution like NBFC, or maybe any banking institution, or maybe any insurance company, so in banking also there are different segregation. So in bank or in NBFC, I need to see whom I am financing, who are my borrowers. If my borrower is the certain class who are somewhere a part of emission, like the industry who are somewhere contributing to more carbon emission, then that carbon emission is my scope 3 emission for the banking institution or for the NBFC. So accordingly, either you can go with the TCFD or maybe SASB standard, or now because IFRS has already issued S1, S2, and because of that, TCFD has suspended the further updates. Then now year onwards, probably you can see more adoption of IFRS standard, because IFRS issued standard last year. It's only 1st January 2024. So in upcoming years, probably the more adaptability of the IFRS standard we will see. If I see, give an example of insurance company, then I need to see whom I am giving my insurance product, what kind of the industry I am serving. Again, accordingly, I need to see whether I am a part of somewhere ensuring the carbon emission, or it is just a general insurance which I am providing as a my product part. Accordingly, I can go with the framework. Like if just I give you the example of New India Insurance, because they have a wide variety of the products, all kind of the general insurance they are providing. It's very difficult to bifurcate. Then they can go for the GRI framework. If a particular insurance which is somewhere targeting a particular industry only, then we can suggest them a framework or a standard with a kind of industry they are serving. So it's all depend on the industry, or maybe a class of segment where they are working.
Thank you, ma'am. And if you can take one more question, which has just received now. which company is required for okay, so which company is required to undertake non-financial reporting is a question that we have received, ma'am.
So right now in India, as I mentioned, BRSR reporting is mandatory for top 1,000 listed companies. So BRSR is the example of non-financial information. So for top 1,000 listed company, BRSR is one of the example for non-financial information, which is mandatory for them. CSR is again one of the example for the non-financial information. For that, again, as per Companies Act, we have a threshold for their independent assessment of CSR initiative. We have a threshold like for the project, which is they are having a 10 CR budget and they spent every year they are having a 1 CR. Then they need to have an independent assessment from the social impact assessor. Then in that case, they need a someone as an independent assessor to get an independent assessment. So if that kind of the information is there, then you can think upon that there are a lot non-financial information which is a part of my annual report or integrated report, which we will discuss in coming slide. And if these are the information which is part of my annual report and integrated report, then we can decide to go for internal audit in a control aspect, because ultimately the information which is part of my annual report, then as a company I should be more careful about what I am presenting in my annual report. So certain controls should be there, certain my comfort should be there. So this is something I think answer I can give on this particular question.
Yes, thank you, ma'am. And I think this question that I'll read out now is something in continuation to the first question that we received. So, which standard will be more apt for companies in the service sector, non-manufacturing sector, so like IT and ITES?
So in IT, if I talk about, they are somewhere a more industry which is more human driven industry. Without your people, you cannot run your business, because ultimately they are only who are helping you to run a business. So just you need to choose a framework or a standard which is giving you a comfort on your social aspect. So whenever I'm talking about any social aspect, so GRI can be one of the standard, and also we need to understand the difference between standard framework. When I'm referring the word framework, it means it is just a reporting structure which is giving me a just a structure that how I can present my report. And when I'm referring to particular standard, that means it's giving me a procedure how I can present my report, a kind of a standard, like this is how I should have a specific thing in my company or in my industry. So both we need to understand, like GRI is a standard, it is not a framework, although it's a like global reporting initiatives, but it is a standard. IFRS is a standard. BRSR is just a reporting framework, it is not a standard, it is just a structure, reporting structure, that's how I need to present my report. So that also I need to understand. So for IT industry, I think either you can go for GRI, or maybe you can go for IR framework where you have a human capital specifically to assign for them. So this is something you can opt for the IT companies if you find it suitable. There are multiple other standards also, like financial institution. I already mentioned SASB is something which is more prominent, or TCFD earlier, which was widely used by most of the banking institutions and NBFC institutions. So the institutions which are widely being run by the human capital, they were using mostly the TCFD or this one IR framework, and like IT company where the my climate part is not there. So in that case, you can just go for the GRI part, GRI framework.
Yes. Thank you, ma'am. I think we are good to go ahead, and we're done with the questions that we had now.
Okay. Well, next part we'll see importance of the internal audit and the non-financial reporting. Just to continue with them. So when I'm talking about, like, it was the question, what kind of the report is required for the internal companies required the non-financial reporting and internal audit structures. So When I'm talking about the internal audits and the annual reports, so my inclusion of the non-financial data and the non-financial reporting in the annual report is regularly increasing. It is very old survey, just a 2015. If I just consider it now, it has been more increased, and regulatory requirement is there. So now the regulatory requirement is there, and my non-financial reporting is a part of my annual report. In that scenario, the internal audit is something which is required for every company. If I just give you a background, like BRSR core timely disclosure, in India we have a BRSR reporting structure. After BRSR reporting structure, BRSR core also being introduced for the purpose of assurance. This is the timeline for the assurance applicability. So for 23-24, it was mandatory for 150 companies. For 24-25, just we closed now. Top 250 companies, it was mandatory for the assurance. For 24-25, it was also mandatory to have a disclosure for the value chain partner, but that was deferred for 1 year. Last year, disclosure was there, notification was there, but it was deferred for next year. So now, for next year onwards, we will also see the value chain partners disclosures for the ESG part. So not only for top 1,000 listed companies, for the suppliers, for the value chain partners who are supplying to those top 250 companies, for those also we will see the ESG compliance. Next year, my ESG BRSR core assurance is mandatory for 500 companies. And then by 26-27, for top 1,000 listed companies, my BRSR core assurance is mandatory. So by 26-27, all top 1,000 listed company will come under the mandatory requirement of BRSR core assurance, where the external assurance provider will come, review your all BRSR core 9 attributes, and then based on the review, give you the assurance report, the opinion, whether it is clean or qualified. So this is the timeline. And for this timeline, if for example your company is coming under top 1,000 for say after 500, for 26-27 timeline, you just need to prepare yourself from today itself. Because if I'm talking about 26-27, I need to start preparing today for my company, whether what are the first of all non-financial areas, what kind of the internal controls I need for those non-financial areas. Then these are the controls I need. Then I need to have a testing whether these controls are adequate or not, these controls are sufficient or not. Once adequacy is being tested, whether these controls are working effectively or not, whether these controls, validation is also required, RCM is also required. After that, only you will be able to get an internal audit. Once 3-4 quarters you get an internal audit, then only as a company you get a comfort. Okay, now external assurance provider can come review us. If my report will be provided to the external assurance, there will be a good picture that external assurance will be able to see as an internal audit report. Otherwise, you are not ready for the external assurance. So I think this particular screen can help you to understand why it is important for us to prepare now. If I am coming even on a rank of 600 or a 700 or maybe 800, if you are coming in a rank of now 400 or 500, where the assurance is just on a, our head. Today it's September. After 6 months, you will be needing assurance. Then it is just a time, rush that you need to think upon, and you start need to working very soon. And from financial year 25-26, there will be a need of limited assurance as well for the value chain partners, although there is a deferment notification. So that deferment notification will be there, and accordingly, we need to see when this will happen for the value chain partners. How board members will see, and before having a board responsibility, first we need to see the audit committee role in terms of enabling BRSR core disclosures and assurance. So every time, whenever the discussion was happening, how these non-financial areas are linked for the board members, how it is being required. So that's the reason I just kept this slide of the understanding purpose, that this is something a LODR requirement for the non-financial area, where the audit committee is responsible for the non-financial areas as well. Because otherwise, what is happening every time we were having a discussion that audit committee is only responsible for the non-financial area. They are not responsible for non-financial areas. So the first point you can see here, where the identification and prioritizing of the risk and opportunities, ESG risk. This is something responsibility under LODR for the audit committee, where audit committee need to ensure the integration of ESG risk into the company risk management. So first priority, my existing risk register, which was a regular feature of my board meeting, that need to be updated with the environmental risk and the social risk, so that ESG part can be integrated with the existing risk register. So that is one of the LODR requirement. Second, providing guidance on how entity communicate the ESG story. So this is something, a requirement, like many of the participants were asking, what is the reporting requirement, which framework will be applicable, which reporting, structure. So audit committee is the final authority who will decide, who will take decision. That this is how we need to go as a company. We can suggest these are the framework which are somewhere applicable, or maybe the suitable one for the company. Then ultimately decision needs to take by the audit committee. They will decide, okay, we need to go with the GRI framework or TCFD or SASB or CDP, or maybe any other framework which is being required. So audit committee need to guide the organization on how effectively they need to communicate their ESG report, their ESG reporting. They need to make a comprehensive narrative about the practices, their achievements, challenges, whatever the regulatory requirement is there, mandatory requirement there, that will be always required. Apart from that, any other thing is required, that decision will be taken by the audit committee. Third is determine material information and impact on financial reporting. So that is again one of the requirement of LODR, where audit committee is required to evaluate on how material aspect can influence the financial statement and ensure the connectivity of non-financial reporting and financial reporting. So we also need to link all those non-financial reporting aspect to the financial reporting. How it can be linked? Like if I give you just example of BRSR reporting, in my BRSR reporting, there is a one question which talk about what is my average payable turnover for the creditors. How many days I generally pay to my creditors. So that is about the good governance practices. I am not delaying to the creditors in terms of payment. So they are asking a financial number. They are asking a certain financial information also in non-financial reporting. So that I just need to align with my financial aspect. If any delay I am reporting in my non-financial reporting, for example, somewhere my days are coming more than 45 days, or something more than that, then we all know that MSME creditors provision should be there. So audit committee need to ensure that if that is happening, whether interest provision is there or not. So that's how a connection need to be built. Fourth is assess if appropriate control are in place to ensure reporting consistency. So here the internal audit and internal controls picture come in place for the non-financial data. It is a mandatory requirement under LODR, where regulators seek comparable regular ESG data as well as for financial data. If my regulator is asking for the reporting, just give an example, BRSR reporting. They are asking for the BRSR reporting, current year data as well as previous year data. Although I understand it's a just the reporting. Still, it is a part of my annual report, which is in a public domain. Then in that case, I should have a proper control in place in my company so that whatever data I am publishing in my public domain, that should have a certain validation before coming in a public domain. So that is one of the kind of important requirement and a responsibility on an audit committee. Monitor assurance as a part of annual and a consolidated reporting. So again, it is an audit committee responsibility, which includes your overseeing the external assurance process of BRSR code and how it needs to be, have place, procedure in a company. So again, when audit committee is there, they will decide how it will run, what will be the process. So generally, they have a system where internal audit is also part of certain things, that before external there should be internal audit, there should be RCM, there should be these controls and everything. They generally test and they generally look upon. Monitor and assess the capability and independence of the assurance provider. So whomsoever they are appointing for external assurance, and sometimes as well as for internal audit, if they wanted to appoint someone external as an internal auditor, then their qualification, their expertise, their experience, everything, it's being up to the board members and the audit committee. They will see, they will decide, they will take care that whether the person, whether the firm is competent enough to take a job or not. So I think this slide will give you a proper understanding how company is responsible with respect to the non-financial data. I was also explaining about the integrated reporting and a structure part. So when it's come to the integrated reporting, if you just recall the previous notification, 2017 SEBI has issued a circular where the importance of integrated reporting was introduced. Although it is not a mandatory requirement, it was given as a best practice, and voluntarily basis adoption was recommended for top 500 companies. At that point of time, BRR was the report instead of BRSR report. So SEBI has recommended them to, instead of having an annual report, to have an integrated report. So they were, introduction of the IR framework. IR is again one of the framework where we generally incorporate the non-financial reporting information in a financial data. So here you have a combination of both financial information as well as non-financial information. Annual report that you are preparing as per the IR framework. So what is the IR framework? I'll show you on an upcoming slide. Kind of a green initiative that company may host their integrated report on their website and provide appropriate reference on their annual report. When companies opting for this integrated report, so in that scenario, the printing of the annual report is also being reduced, because ultimately that is something a part of green initiative. I also kept the link of that circular, the old one. So whenever the slides are with you, you can always access the same. So when I'm talking about the integrated reporting, it includes your financial statements, it includes your management commentary, the governance reports, your environmental and social impact reports. So many reports can be there, and your corporate communication. And when I'm saying the environmental and social impact reports, so there are the reports which generally we call it, we prepare a report on a capitals where the resources and the relationship used to affected by the organization. So these capitals are financial capital, manufactured, intellectual, human, social, and relationship, and natural capital. So how we keep all these capital linked when we are preparing the integrated report? Purpose is to create value over the period. And when I'm saying over the period, again, period is defined short term, medium term, and long term. So when you are explaining all those 6 capitals, you need to give a value over the period of time, and over the period of time will be short term, medium term, and long term. This is how the integrated report generally we see for the companies. So these are the 6 capitals. For financial capital, all your financial data will come. Your balance sheet, your all ratios, your structures, everything, all financial data will come in the financial capital. When I'm talking about the manufacturing capital, manufactured capital, so for the industries where you have a manufacturing entities, where you have a manufacturing facilities, you give a all complete data insights about like how what kind of the manufactured capital you have, kind of the facilities you have, everything you talk about here in this capital. In terms of the intellectual capital, so about kind of the intellectual asset as a company you are having, that asset generally you classify in a IC. In human capital, you more talk about your people, your own people with whom you are working, so your employees, your workers, your community, everything you consider to include in a human capital. When I'm talking about the natural capital, so this natural capital includes your environmental aspect, the climate change aspect, the biodiversity, the utilization of the limited resources, natural resources. So all those aspects we covered in a natural capital. And the last one is social and the relationship capital. So in this part, we cover the other community, other than employees, your community, your other people, that we cover in a social and a relationship capital. A purpose why this was introduced. So here, more than shareholders, you address to the stakeholders. Earlier, annual report was only to address to the shareholders. When it's come to the integrated report, it is addressed to the stakeholders. So it is a part of improvement in the process of stakeholders engagement process. With your business performance, you also provide details of your non-financial data, your environmental performance, your social performance, your people performance. So that also you cover. And when you're giving a performance, that performance also you are bifurcating in short term, medium term, and long term value creation. So you are giving a complete range, detailed understanding to your stakeholders, and you are giving a conforms with the reporting requirement. So regulatory requirement also you are serving. So just I have given an example like how you can see the change. One example, like if you wanted to see L&T in 21, it was mentioned as a full annual report of financial year 2021. So that was the way, because it was the normal annual report. But in 22, because they opted for the integrated report, so they renamed their report integrated annual report 21-22. Similarly, if I just give you the example of ICICI, so in 2028, you can see their name ICICI Bank annual report financial year 28. ICICI Bank business responsibility report, because that time BRR was applicable. In 2019, if you see, so they mentioned integrated report. So that's how you see they are not mentioning an annual report or a full annual report. It is mentioned as a integrated report. So when you just have a time, go on some of the top 500 companies or top 250 companies, you can see the change from an annual report to a integrated report. Any question, Anu? If you want me to take right now or just. Now, when we come to the board responsibilities, so as I was telling you, like we also discussed what is the board responsibilities. So this slide is little bit more exhaustive. where you understand that disclosing the ESG related risk and KPIs is only the first step to meeting ESG requirement and the responsibilities. The fourth point I just highlighted before that third point, which was question from few of the participants, the approach, how to address the ESG reporting and other related obligation, the framework part, everything is there. Fourth point is most important for all of us. Design and deploy the internal control over sustainability reporting. When you are having a sustainability reporting within your organization, it is also required for the board to have, design and deploy the controls over the sustainability reporting. Because, like, simple example, if I give you for BRSR report, every year I need to give account for my total number of employees as on 31st March. How many male members, how many female members, how many differently abled employees, permanent, contractual. Then there are certain how many trainings happened, what on topics training happened. It is just a disclosure. But the data from where we are capturing, if no one is somewhere auditing that data, if there is, whosoever is capturing that data, there is no control. The reliability is something which is on a question mark. So there should be certain controls. There should be, certain uh, Mhm. There should be certain designing of the controls over those sustainability data so that whenever we are preparing the report, that report should be reliable enough for the stakeholders. And whenever you are going for assurance, or maybe any stakeholder is referring to your report and they wanted to go for the source document, it is easy for you to replicate. So this is something, one of the important requirement for the board members. And the role of the internal audit and integrated is again important. It is a part of my annual report. It is a part of my integrated report. So my strong internal control and risk management system will help me to have a good non-financial data in my reporting system. Because ultimately what I need to improve, what I need to do that, I need to have a connect with these areas where I can improve both my technical and less tangible controls. Our ultimate benefit is to have a stakeholders to whom I'm reporting all these things. So ultimately, with a strong internal controls and the risk management systems, both things I need to manage. Second, internal audit is something is as a powerful facilitator. We all know in a financial domain we all have experienced the same. So this is something, a kind of integrated thinking which we need to understand when it's come to the non-financial area as well. A holistic approach, because if that holistic approach we are not considering right now for the non-financial area, somewhere in the future it is going to we need to pay something a very what I should talk it like is that there will be a higher penalties can be there, maybe higher cost on the company, the adverse impact on the company, which we need to think upon if somewhere we are not considering the importance of the internal audit. So these are the few questions which I just kept, like what can be the key questions which for the internal audit in relation to the key reporting requirement you can consider, because now I think we are on the time where we should start talking about how we can start integrating the internal audit for the non-financial areas. So first of all, how the process start, we need to evaluate the as is process, what exactly the current process we have in the organization. Because till the time I am not aware about the process, what exactly right now I am having in my organization, it will be very difficult to decide whether further controls are required, or maybe any other thing I will be requiring for my non-financial aspect. So like first question is, what are the existing governance, risk management and a control process to be leveraged by the organization for integrated reporting purpose? Then does the integrated reporting cover the material activities, capitals, and the stakeholders, whether it reflect the current and the future objectives? What are my future objectives? So that also I need to answer. Then is the underlying process for the production and the integrated reporting is adequate or not? So that also I need to check, and accordingly I need to answer. Does the integrated reporting scope reflect the organization reporting strategy, whether it is aligned with the strategy or not? Is the information conveyed in the integrated reporting is reliable or not? So that also I need to answer, whether we can validate that information from somewhere, source of the data, or if there is source is reliable or not. What is the level of understanding of integrated reporting concept and principle within the organization? This is something again an important requirement, because the many time it happened like few team members within the organizations are not aware about the concept of the integrated reporting when the first time it is being required to implement in the organization. So for the first few years, like 1 or 2 years, it is a new thing for the organization where they need to understand what exactly it's required for the human capital, or how it is being different for the human capital and the social and the relationship capital, what will come in the intellectual capital. So all these aspects need to be clear within the organization. Are the key information providers to the integrated reporting, such as risk management, finance, sustainability function, aligned and future focused? So that also we need to answer. Responsibilities of the function involved in the integrated reporting clearly defined. The communication lines are effective or not. So internal audit, I think everyone is aware about. We generally talk about 3 line of defense. So when it's come to the 3rd line of defense, the internal audit we talk about. So the communication lines are effective or not. How connectivity taken into the account in the organization IT governance, financial non-financial information correctly linked in the organization value creation process. So that also we need to respond. Information on the nature and the materiality of the interaction with stakeholders for the value creation process over the time reliable or not. And the last one is, which is very important, materiality threshold taken into account in decision making for the interaction with key stakeholders. And when I'm here talking about materiality, it is not only for the financial materiality, it is all about double materiality, where we consider the impact materiality also for the purpose of integrated reporting. So my financial materiality and impact materiality, both combination work here for the purpose of financial as well as non-financial information. Anu, is there any question?
Yes, we can take a few questions.
Yeah, please tell me.
Yeah. So the first question that we have is, could you please help to understand legal requirement for having separate internal audit of non-financial information? If not, how to encourage companies to take internal audit of non-financial information?
So in terms of legal requirements, so internal audit legal requirement is already mentioned in the Companies Act, where the internal audit is required. As such, for it is required for financial area or for non-financial area, it is not somewhere mentioned. The scope of work, how to conduct, it is being mutually decided between the company and the internal auditor. So somewhere, you need to discuss with the company that now where the reporting is there for the BRSR or maybe any other sustainability reporting framework, this is something also need to be considered in the scope of work, and because reliability of the information is required. So that internal auditor, I think, need to encourage to the companies. And as and when the external assurance is required for those sustainability information, those external auditors can push to the companies to have an internal audit for the purpose of BRSR report.
Yes, thank you, ma'am. The other one is, what is the difference between human capital and intellectual capital?
So intellectual capital generally we refer where certain kinds of patent or maybe trademarks or kind of similar those things where company have their own rights. So this is not about any human capital or maybe the people whom we are taking, because in human capital we consider their own employees, about them the reporting generally being considered. And in terms of the intellectual capital, so there are certain design, there are certain trademarks, patents, so those kind of the information generally we consider for the intellectual capital.
Yes, thank you, ma'am. And the last one that we have as of now is, where can we get the format of IR reporting? Is there any reporting framework for the same?
Yes, so just you need to Google about the IR reporting framework and you will get the reporting framework design. And again, I just mentioned that it is suggested to the 500 companies. So now most of the companies are having their report in an integrated reporting framework. So just go on these top 250 or a 500 companies, you will find all those reports in an integrated reporting framework itself. It's just they want six capitals where the designing can be in a different format. They have just given the structure that these six capital you need to use, and reporting is required in a short term, medium term, and a long term tenure period. So guiding principles are there.
Okay. Thank you, ma'am. I think we are good for now. We can move ahead with the session.
Okay. So, as I think Anup was asking, what is the regulatory requirement of the internal audit specifically for the non-financial? So, for the regulatory compliance purpose, like now BRSR reporting is there. EU also has a CSRD requirement. Many of the compliances are there, like CBAM compliance. We have soon we will be requiring the digital product passport. Then there are different other frameworks. So if companies are opting for the sustainability reports on all those frameworks and these compliances are coming to us, so whatever information you are giving on all these reporting frameworks, so ultimately the reliability and the validation of all those information is somewhere a need, which can internal audit can help you to validate that whatever information we are presenting in BRSR report, or whatever information we are giving in a CBAM, or whatever information we are presenting in any other sustainability report, it is reliable enough, it is validated by any external agency. So this is kind of one of the need I understand can come. Credibility, so always like investors, regulators, rating agency, so they generally rely on the ESG data for the decision making, which is being audited by the external parties and the internal auditors. In ESG rating also, I just give you the example. The two type of ratings are generally happening. One where they are giving a rating on the disclosures, and one where the rating is given on a core ESG rating. So core ESG rating means where rating is being given on a audited data, which is being more relied upon by the stakeholders. So that's how a credibility improved when you are having an audit system in place within a organization. And weak controls invite allegation of the greenwashing. So that is the general term which comes in a non-financial domain or non-financial areas when it's come to the ESG reporting part. Risk mitigation. So in terms of ESG, at present there is no as such probably litigation as a company you were facing, but in future, which I am understanding, like SEBI will also come up with certain notices where they will be asking you from where these informations are captured, from where these things are being captured, and there will be other government agencies and other regulatory agencies will also be asking certain things. So if you are not able to give them source documentation, or maybe not reliable data is not being presented, then it will be somewhere giving you a reputational damage. Litigation will also happen, penalties will also be there, and ultimately it will somewhere being giving you hiccups for the market access. So if you have a strong internal control system in your organization for the non-financial reporting, it also, It will help you to mitigate those risks which can, be in future. So this is kind of a risk mitigation plan, which probably right now we are not able to foresee, but maybe can come up in a future. And integration with a strategy. So strong controls can support long-term value creation, which again can embedded with the sustainability into the business risk management. How we can plan that? So framework for using internal controls in the ESG reporting. So it's a kind of similar thing that we do in a financial reporting framework. First aspect will be the risk identification. So mapping of the ESG risk. Now the here risk will be the different one, which probably earlier we were not discussing with the companies. This is something a change which you will find out when you start working with the companies, because previously whatever discussions we were having with the companies, it was all around the financial aspect. Now the discussion will be the entirely different one, because here the discussion will come upon like for inaccurate carbon footprint, incomplete safety data, vendor human rights violation. So your vendor human rights violation, how it can impact you, that you need to discuss with your management or maybe the board members. Overstated CSR impact. So those kind of the risk. Now these are the things which probably earlier we were just having as a joke, or maybe we were not considering them as a risk, but now it is having an impact on our businesses. We are having a policies for our businesses that we will not deploy any child labor for our business. We always have a board also in our organization. There is no child labor, there is no member who is under 18 working in our organization. But are not even taking care, and we were not even aware about that the vendors whom we are working, whether they are having any child labor or not. And when I'm saying a vendor will be everyone. So even the people who are just coming from somewhere just to serve you a tea on nearby, if they are having a child labor, that can also be considered as a human right violation that you need to take care and consideration you need to take when you are having a ESG risk mapping system. And this is a real example where a companies has loses the business of from a foreign vendors just because of they have observed the child labor in the tea vendor. So because of that, they loses the business because it was not in their control whether they are having a child labor or not. So you need to assess impact, the likelihood, considering the both penalties and the reputational damage. Once you have a risk identification, then we need to design a control and mapping, risk control management. So we need to define the control objective, what kind of the control seeks to achieve, what kind of control we can implement in that particular area. We need to identify the key control activity, whether initially it will be manual, later on we want it to be automated. It can be automated or not can be automated, that also we need to foresee. Preventive, detective, all we need to think upon. Then assign the control owner frequency of the operation and specify the evidence to demonstrate the control execution. Then see the data linkages and the traceability. So we also need to ensure each ESG metrics can be traced from the disclosures, system of the records, source document. For example, my utility bill, because for carbon footprints, I always be requiring my utility bills. Till the time I'm not even having my utility bills, how many units as a company I have consumed for the electricity consumption, how the carbon footprints can be calculated, my HRMS, HR data, my vendor due diligence. Whenever I'm onboarding any of my vendor, whether the basic ESG compliance I'm checking or not. So that I need to ensure. Maintaining the audit trail for the recalculation and the verification. So that I need to take care in a part of C. D, operation and the monitoring. So I need to apply risk control indicators, KCIs. For example, vendors without ESG due diligence, variance in the scope 2 emissions versus electricity bills, so that I need to regularly monitor. So once you have onboarded when vendors, or maybe one person who is onboarding, so is there any maker checker control who is checking who, how many vendors are being onboarded, whether any vendor who's being onboarded without ESG due diligence is being onboarded, or proper documentation is there or not. Continuous control monitoring versus analytical workflow tools. So those also I need to take care. Last part is assurance and improvement. So when all these things are being taken care, then internal audit test, design effectiveness, control are well or not, and operative effectiveness, whether regularly working or not, does actually work in practice or not. Periodic reviews, gap closures, maturity assessment, manual checks to automate how we can go that. So that's the thing we need to take care. When it's come to RCM, so RCM, I don't think so that it's a very new thing for all of us as an internal audit experts. But if when it's come to the non-financial aspect, so just as an example, if I talk about a use of outdated emission factors can lead to an incorrect environmental reporting. So here also we need to make sure ourselves, like what kind of the things we need to update ourselves whenever I am calculating the emission factors. So there are certain updates I should be aware about when the updates are coming. What is the frequency of those updates? Whether whatever the calculation I am doing for the carbon emission, it is based on the latest update, or somewhere I am using the older version. So that I need to take care. Incomplete workforce diversity records resulting into the misleading disclosure, social disclosure. So records should be complete. So that can be a risk control metrics part. Inadequate vendor due diligence. So that is the governance lapses part. So this is how you need to start working on the risk control metrics part. Just give me a minute. I'll show you one Excel how we can prepare a RCM. So that practical, I think, will give you more understanding. Just a minute. Um, I'm just sharing in 2 minutes. Let me find out. I hope you can see my screen.
Yes, we can see the screen.
So this is just a one of example where you can see, like, first column is about KPI, then target monitoring activity. What is my target monitoring? Then we generally specify the risk. What is my risk and code? Then specific risk level, control code, and then here from you can see the control activities part. So if it is the total one sheet, this one will help you more. Yeah. So from here you can see, like, control description. You can see here, like, this is something how control can work, control attributes, what can be the control attributes, my functional segregation, whether, personal responsible for the execution, control owners, global people office, or maybe, who can be the data owner, person responsible for the review. Then what is the type of control, whether it is a key or a non-key, what will be the frequency, whether it will be the monthly or an annual, the control activity, so whether it is preventive or a detective control, then the narrative reference here. So whether it is from the human resource or from any other document, then the reports extraction. So what will be the report name? What will be the report frequency? It was because of they have a proper IT system. So what is the IT system where it can be extracted? Evidence to be documented. What kind of the evidence can be documented here? Then to support the effectiveness, what can be other document? Then the disclosure topic. So assertions, generally when we are preparing the RCM, purpose is always to ensure the assertions. So you just need to assurance like integrity, existence and occurrence, accounting metrics when it's come to the operational and a cutoff. So because it's a non-financial, so it will be always not applicable. Then accuracy, measurement, assessment, rights and duties, presentation and disclosures, manual control, or maybe IT control, what is the IT system, then whether the status of control, either it is implemented or to be implemented. So this is how Excel RCM you can prepare. It was because prepared for one of the telecom industry, so they have a proper IT system, they were having everything in place, so more IT controls were there, some of the manual systems were also there, but this is how generally you can start with the working when it's come to the RCM part. When I'm working on RCM, so generally we work on three metrics, 3 by 3 risk metrics. In India, most of the time we work on 3 to 3, but there can be organization where they can request you to have a 4 by 4 or 5 by 5. So just for the example purpose, I have just given you the reference of all the metrics. But most of the times, organization request you to work on 3 by 3 metrics. So high, medium, low, probability and impact, where we generally work. Most of the manufacturing organization follow the OSAS system also. So this is something more being applicable. 4 by 4, where somewhere they wanted to understand the impact and the probability in extreme, high, medium, and low. So this is something a metrics that can be considered. And 5 by 5 is something which is more elaborated and which assess the risk event by analyzing the 5 level of the likelihood and the severity, where we consider it extreme, high, medium, low, and negligible. So not most of the organization, very rare case in India, this is something you need to apply, but just for the educational purpose, I kept it here so that if somewhere anyone wants to have, or any MNC is asking you to have a RCM or metrics on a little bit on an elaborated manner, so this I think you can apply for them. And these are the components. So first we need to identify the risk. We need to have a control activity. I think we already have a scene in Excel. We need to have a risk assessment. What will be the likelihood? What will be the impact on the organization? The responsibility of the assignment, data owner, management. So we need to assign the roles and responsibility of the implementation, monitoring, control, measurement on the individuals and the departments. And last will be the monitoring and the reporting. So for that, I already, emphasizes a lot about the internal audit, why it is important to have in place in the organization. So Anup, if there is any query, just please let me know. This is a last slide from my side, how to create a RCM for your organization. So first step will always be to define an objective, that this is the objective, this is the area for which I wanted to design or create RCM, identify the critical asset, then gather the data, conduct a RCM analysis. This is a complete, analysis because there are certain walkthroughs that we need to have. Prioritize risk. You need to have a listing of the risk, develop a maintenance strategies, implement the RCM program, and then there will be a continuous improvement that you need to have in place in system so that it should not be outdated. It is not a one-time exercise which will be conducted by the organization, like because we wanted to start, it will be a regular feature. Not necessarily every year, but once in a 2 year, it needs to be revisited so that continuous improvement can be done. And how we generally implement and non-financial disclosures. So first part is always stakeholder engagement and a materiality analysis. For materiality analysis, I already explained double materiality is something which we need to apply here, financial as well as impact materiality. In India, we do not follow the triple materiality. We only follow the double materiality. Second is setting goals and the commitment. So, as a company, you need to be very clear about what exactly is your goal. When I'm saying the goal, it is not about the business goal. That is always we are aware about. It is about the ESG goal, what we wanted to achieve as a commitment. 2070 is the India target to be a net zero. Before that, every company should have a internal targets that as a company, this is something we wanted to be a net zero. Then establishing a system and processes. So this is third part is something where as an internal audit practitioner or where as an internal audit professional, our roles come in a picture. So this is something where we come in a picture. And fourth, again, it is as an internal audit professional, monitoring and a communication performance. So first three part is for the ESG implementation. So in implementation, we help to design and deploy internal control system and RCM part, and in remaining three. Fourth part is something where monitoring progress and communication performance is something where internal audit regular feature is there, is something where we work upon. Fifth is alignment of ESG reporting framework. So I think that we already discussed, and report content development. So that is the part of regulatory requirement. Guidelines, frameworks, I think that we already discussed. So BRSR, GRI, IR, Sustainable Development Goals. That was all, whole discussion we already did in a previous few slides. So this is a kind of a circle for the non-financial implementation and disclosure, which we need to follow as a company. Any question, Anu, or anything which now you wanted me to take up? Because this was from my side.
Okay. So I don't see any questions as of now. I think we have covered almost every question, but we can kind of give a minute for the participants
Yeah, sure.
to post any question that they want to.
Yeah, okay. Because I just tried to explain about the whole ecosystem, how it is working, and where internal audit practitioner and professionals have a role in the that ecosystem.
Okay. So I don't see that there are any further questions coming in. And I think we answered almost every query that we had till now during the sessions. Yep. So we can move to the conclusion, ma'am.
Yeah, if there is no query, then we can conclude. I just, as a concluding remark, I can say, like, now, as in 1,000 companies, we always see a opportunity. But it is not only about the 1,000 companies. There are a lot of opportunities which is beyond those 1,000 companies. And as somewhere when I'm talking about internal audits, internal controls, and RCM. This is something a very niche area which I understand very few people have a expertise. And if as an internal audit practitioner you have a expertise in those areas, you always have opportunity to explore your interest in this area. So just you need to explore, and you can go with the those companies where the requirement is there.
Yes, thank you, ma'am. So we can proceed with the conclusion. And for that, I wish to extend my heartfelt gratitude to our today's speaker, C. Harsha Ramnani, ma'am, whose guidance surely has helped our participants to understand the subject a lot better. I also thank the Institute, the President, Vice President, and the Chairman and Vice Chairman of IASB, and all the dignitaries of the IASB for conducting this session. And last but not the least, to all the participants whose active participation has helped a lot. So thank you, everyone. And with this, we conclude the session. Thank you.